What is good, guys? It's Rey-Jay back with another video, and this one will break down what's going on with SPY, Nvidia, Tesla, the QQQ, and many tickers out there. I'm going to talk about what's going on with the tech sector in the markets right now and what you should be watching for tomorrow, as we have more data coming out in the morning that's going to dictate how the market moves for the entire day. Before breaking things down about what this data is, how this may affect the markets, and what levels you should be watching for, I do have to mention a couple of things before starting. Firstly, I am not a financial planner, so take none of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And finally, don't forget about the Webull link. The offer ends very soon. If you deposit any amount of money, you are guaranteed up to 12 free stocks. Anyways, now let's talk about the market, what's going on with all these different stocks. SPY was down 0.78% for the day. It ended up cooling off a bit more during the pre-market before getting an intraday bounce. And it's basically just waiting for some more data to come out to really dictate how it moves. Tesla closed kind of red, Aapl was green. Neo and many other stocks like the QQQ and Nvidia, they all closed kind of red today, but they did make an attempt to rebound. So I'm going to break down why that was and what caused the market to sell off the way it did. So basically, yesterday, the Fed came out and they were just scaring a lot of people. Maybe the market didn't respond initially to the news that came out, but the Fed came out with the FOMC minutes and they announced that many of their members want to raise rates even more. If the economy is too strong based off the data as well, they're going to be raising rates more, and this could lead to a recession, basically, right? So the market has been pricing another rate hike, right? There's a 92.4% probability of us getting another rate hike in July now. And the thing that came out in the morning that caused the market to slow down was this data. Basically, the private sector companies added 497,000 jobs in June. That's more than double the expectations, according to many experts. And leisure and hospitality made up the majority of those new hires. This is very important stuff because when you look back at like May, we saw about 267,000 jobs gained. That's even better than what the estimate was. So the job sector is still showing some strength. Why is this bad? That's because the Fed was telling us if we get strong jobs numbers, if the economy is still too strong, the Fed has to continue to raise rates or maintain a more hawkish stance to slow things down. Now, you could agree or disagree with their strategy right over here. That's your choice, but it's very important to just look at this from an objective, unbiased manner. And what this means is the market is now getting ready for more rate hikes, which means that things could get even tougher for the longer term. Many officials were saying that the Fed should be done with the rate hikes. That's what some people like Bostic actually said not too long ago from the Fed. But now people are wondering if they're going to keep raising rates like this, will this lead to a recession? And if it does do so, how severe is it going to be? Because the more they do this, the more severe the recession is going to likely be. That's coming very, very soon. Now, on top of all this news about the Fed, there is this war going on between the US and China in the tech side of things. So it's a tech war. And this is very important because China has restricted exports on critical chip metals. This news came out very recently, just like about like 2 days ago. But this was still making a lot of headlines today about the tensions because Janet Yellen just went there to be discussing policy and negotiating. So with all this stuff going on, I mean, like I said before, this is very important. And this had a big effect on many of these Chinese tickers, especially lots of companies affiliated with China. So just watch this very carefully, see any developments involving Janet Yellen, and it's going to be very important. Now, when it comes to the data coming out and all the earnings, we have Levi's coming out very, very soon, a little bit after the time this video comes out, or actually maybe a little bit before, because I'm going to be recording this and uploading it a little bit later. So very soon, Levi's will be reporting earnings. We'll see how that goes. And we also have other companies reporting earnings, which aren't as significant. But for the data coming out for tomorrow, this is going to be the most important thing for tomorrow. 8:30 a.m. is when it's going to be coming out Eastern time. So 1 hour before the market opens, we have non-farm payrolls coming out. We have the unemployment rate. That's going to be the most important thing. And the labor force participation rate, all very, very important stuff. Now, one thing worth mentioning is the labor force participation rate has dropped compared to where it was before the pandemic. That's because a lot of individuals left the labor market and they had to either retire or they passed away or they just went to do something else completely different. And when that happened, right, this caused a big, big, big shift in employees after unemployment ended up spiking. And a lot of people are still actively looking for jobs. There are other people who were finding jobs, but they're mismatched. And then there are other people who are actively in their jobs while other businesses are still looking for more employees to fill those jobs. So it's this big mix in the economy that's still going on to this day. But unemployment, the official unemployment rate that's been reported has been going up as of recent. It went from like 3.2% not too long ago to about 3.7%. And the previous report was 3.7%. So we're expecting it to be at 3.7% again. We will see if that's the case. We want this to be at 3.7% or higher, unfortunately. Now, do I truly want that? I don't actually want that to happen because I don't want any pain for any people. I want the best for as many Americans as possible. I want available jobs. I want people to do well and thrive. But the reason I'm saying this is because this is what the market wants. The market wants some short term pain, which means higher unemployment, so that the longer term will have less high inflation rates. We'll no longer like have that. We'll have less pain in inflation. We'll have more opportunities going forward. High inflation could become a very, very big issue if it maintains a high rate for a very long time, because you have to remember it's a percentage basis in which it's growing in. So we want inflation to slow down. The cost of us getting it down, or at least one of the major costs, is going to be unemployment going up. And it is what it is, right? It's unfortunate, but that is what has to unfortunately happen in the eyes of the Fed. So with that said, for tomorrow, you're going to be watching this data. We want 3.7% being unemployment rate or higher than that. If it's higher or very close to that, the market may get a positive response. If it's lower than that, the market may get a negative response again, causing the market to gap down again. So watch this very carefully. This is going to be some big data. So, anyways, when it comes to SPY, what levels are we going to be watching? Now, I don't know exactly how it's going to play out tomorrow because I don't know what the unemployment numbers are going to be. That's why we have to watch these levels very carefully. Now, if unemployment is kind of high and we do see some downside, you're going to be watching support at 438 on SPY. It's going to be one of the most important support levels. If that fails us, there's some support at 437, but it's not historically that major compared to like the 436 0.65 to like 436.25 area. So the 436s. Then after that, we have 435.76. So we're going to be watching these levels, the 435 area, the 437, right? All these different zones. If it does end up breaking down, 435 is going to be the more important support if it does break down like that. If the unemployment numbers are like decent, the market starts rebounding more, SPY is going to try to maintain a position above 440. If it manages to do that, it's going to have potential to push up to 442. A break above that, then it's going to fill this gap up here to about 443 or very close to there, and make its way up very close to about the 444s. So we have a lot of potential to push up above into those higher levels if we get a break above 442. But until we get there, we need to see this thing hold above 440. So it really depends on the unemployment numbers. I just can't really predict that. I wish I could, but I don't know exactly what it's going to be in the morning. So the best thing we could do is just be prepared for anything, be very, very open-minded, and just know that from a technical standpoint, it looks like the market wants to bounce. We just don't have enough confirmation just yet for a really big bounce. And it all depends on the data. That's going to be very telling. For Tesla came down, breaking below that 275 support. It came down to 272.88. If the unemployment numbers cause the market to get a rug pull, Tesla could come down to 272 if it fails to hold that. 268 to 270 is going to be a very important support zone. If 268 fails us, Tesla has this gap down here to fill, which could end up happening because of all this unfortunate data. Now, even if that does happen, if Tesla manages to bounce off this like level and starts holding around these levels, I still believe it's going to pump approaching earnings. I still stand by that. It's just that for the time being, the market's being very dictated by all this data and all this stuff that's acting as noise, getting in the way of Tesla. I still believe it's going to pump approaching earnings, though. We're just not there yet. We have another like 2 weeks. But until then, let's not worry too much about this like huge pump that could be coming. Let's focus more on the chart in front of us. And for now, we're going to be watching these supports just in case worst comes to show. Now, if the data is decent and Tesla gets a bounce with the market, you're going to be watching the 30 minutes 50 EMA. Could Tesla get above 278? If it manages to do so, it has the potential to make its way up to about this 280 resistance. Right about here, we have this imbalance at 280. Get above 280 and hold it, and Tesla's going to most likely fill this gap very soon, then to 283, getting a very, very nice push to the upside if that ends up being the case. And getting above 283 is good and all, but what's going to be better would be a pump above 285. If Tesla manages to break the high and it does that like over the next couple of trading days, that's going to be a very bullish signal, and Tesla will get closer to the higher 280s to 290 if that's the case. But for now, looking at the charts, I mean, we just have to see what happens with the data dropping tomorrow morning. That's going to dictate how the market moves for the majority of the day. So watch that very carefully. Maybe wake up before the market opens if you are concerned, if you want to just watch it carefully. Then you're going to get all the data you need just by looking at the pre-market and looking at the charts. For Aapl, this is showing more resilience, managing to hold and actually get rejected off 192. If it wants to be more bullish, if we do truly see this thing break and hold above 192, if the data allows it for tomorrow, you're going to be watching Apple get to this imbalance up here around this 192.37 area. Break above that, then we have another important area around 193. We have this resistance right here. And then there's another very important zone right about here around almost 194. That's going to be another important level for Apple. Now, why am I talking about these as if they're in ones like this 194, 193, 192? I'm saying it like this because that's the way Apple is looking on the chart. And it's also because Apple is in new territory. It actually broke its all-time high. So every dollar it goes up, it does have like some resistance now to look at. So it is what it is for Apple. I mean, it's hitting these new highs. That's the reason why it's trading like this. But like I said before, if Apple does get a rug pull, right? If this does end up happening because of the data, we could see Apple come down to 191.11. If that fails us, I'm going to be watching this 190 support. If that fails us too, there's 189.21, then 188.5, then 187.5 as supports. Apple is very tight, it has all these very tight support and resistance levels, but where Apple moves could also dictate the markets. You can see how Apple pumped today, which helped SPY and many other stocks hold up. Like if you look at Apple and then like switch to like SPY, for example, you could see how SPY started pumping with Apple, at least for a large part of today. Apple's going to be very telling, so watch it carefully. Now going into like something like NEO, we saw some downside because of all the Chinese news, so be very careful with NEO. For the QQQ, this thing is once again holding up quite nicely, not looking too bad in my eyes. It's only down like 0.7%, not that bad. The thing that's good about it though is it's above the 30 minutes 200 EMA. So that's a good sign for it. If you want to be bullish after the data comes out, if this thing does end up pumping because of the data, we could see this thing test 368. If that breaks, it's going to have the potential to push up to about 370. That's where it has this unfilled gap right over here, this 370 area. Break above that, and we're going to be watching this thing retest 372. Break above that, then we have 372.8 and potentially 374. But first, let's just see if this thing can break and hold above 368. That's going to be the major resistance. If it breaks down because of the data, if something really bad happens, like I said before, I would love to predict what's going to happen. I just don't really know what the data is going to tell us. That's why I'm trying to be unbiased right now. I typically don't do this. I typically give you guys the direction that I think is going to be playing out, but it's just impossible for me to truly know with all this data. So if the data ends up causing some downside for the markets, you're going to be watching this 366 support on the triple Q, 364.5, 363, and if that fails, it's going to come all the way down to the lower 360s. So watch those support zones very carefully and watch this level very, very meticulously. When it comes to the Nvidia, this thing is once again, it has been dropping after the news that came out involving Chinese regulations, but it hasn't been that bad. Now, it has a head and shoulders like pattern, but on the bigger time frames, there's also this like inverse head and shoulders pattern. So you could argue it's trying to flag. It's very mixed. You could actually argue both ways. I would say that for Nvidia, we have to wait for confirmation. There's a potential bullish triangle-like structure that has been developing, but we'll have to wait and see on it. So I am leaning a little bit more bullish on it, but just to be safe, I don't truly know. It all depends on what the data tells us in the morning. If the data causes a drop even for Nvidia, you're going to be watching this 419 area to be your pivot point. If it breaks below that, then we're likely going to see this thing sink all the way down to 415, then 413.5. And if that fails us, it's going to come all the way down to about 409. So watch these levels very carefully for Nvidia. If Nvidia ends up bouncing and holds above the 50 EMA, that's acting as resistance for it. So it's above this like 421 area. If you manage to hold above this tomorrow, we're going to likely see Nvidia try to push to this imbalance up at 426. And if it manages to get there, I mean, the thing about Nvidia is it's not super volatile right now. It's not making crazy big moves. So it could get stopped around there. But over the next couple of trading days, right, not just tomorrow, the next few days, if it keeps going, right, the next zone above 426 is going to be closer to about 430. And we could see Nvidia make its way up there if we get some decent data. Now, when it comes to Microsoft, this was looking pretty good today. We got a very, very nice push up above this 340 area, which is confirming some strength for the stock. If it gets a rug pull, you're going to be watching 340 as the major support zone. If that fails us, watch 337, then 335. If it tries to push up higher, you're going to be watching 343 as resistance. Watch that very carefully. Break above that. I'm going to be watching this thing get closer to 345 if it manages to break above this. It looks more bullish from a technical standpoint. This is looking a lot more bullish, but like I said before, I mean, this data, once again, is going to be very telling. It's going to affect even Microsoft. Microsoft cooled off today because of what happened in the morning, but it ended up rebounding after getting some nice price upgrades. The reason I'm saying this is because the data that comes out affects everything, even Tesla, even like other stocks out there, even Chinese stocks get affected by all these drops. Look at how Microsoft dropped in the pre-market, it dropped pretty hard because of what just was announced with the unemployment numbers. For now, just don't worry too much about what will happen. Worry more about what could happen and how you're going to react to it based off your technicals. When it comes to AMD, this was looking more bullish to me. It was looking more bullish, but for now, we'll see what happens. So if it wants to continue pumping, you're going to be watching this thing make its way up to about this 115 area. If it ends up dropping down, it's going to be breaking below this 113 support and come all the way down to about this 110 area. Now, which way do I think it's going to go? It is looking more bullish from a technical standpoint. If you just zoom out, you could see it. Nice accumulation right on it, but no promises. I can't really promise anything because it depends heavily on what data drops. So we're going to see what happens with the data tomorrow. But for now, it does look a little bit more bullish from a technical standpoint. So watch these areas very carefully. For, let's just see, Netflix, this is once again holding up pretty decently. It came down to about 430, got a nice bounce, and it actually came between the 50 and the 200. If it breaks below the 200, this 436 area is going to come all the way down to 430 or lower. If it manages to break above 440, we're going to be watching this thing try to make an attempt to fill this gap at 445. So it's kind of stuck in the middle right now. It depends on all the data coming out, so watch that carefully. For the NASDAQ, this thing has this unfilled gap. If it manages to get above the 50 EMA, above this 13,700 area, it's very close to it. It has the potential to try to fill this gap. That's going to be your confirmation of a push up based off what's coming out for tomorrow morning. If not, if it ends up breaking down, you're going to be watching this support all the way down here at 13,600. If that fails, let's watch 13,563, which is our 200 EMA. If that fails us, then it's going to come down to the lower 13,000s. But for now, it's looking pretty decent. I want to see this thing if it can break the 50 EMA. If it does, the odds do favor upside. It is looking a little bit better from a technical standpoint, more bullish. But just to be safe, we'll see what happens with the data dropping tomorrow. Same thing with SPX. If you want to be bullish on this thing, you need to hold above our 50 EMA on the 30 minutes time frame. This 44.19 area, very close to that. If it manages to break above this, we're going to likely see this thing try to push up all the way up to about 44.30 or so, and that's going to likely confirm a trend to about 44.47. There's a good chance that's going to happen tomorrow. It's more likely based off the technicals, but not a guarantee. Like I said, anything can go down with lots of data coming out. If it breaks down, you're going to be watching this support right here at 43.95. If that fails us, watch 43.85. Then we have more support all the way down in the 43.50 area as the next major level if it does break all the way down. So we're going to be watching this very carefully. Could we be forming like a head and shoulders and come down even harder, or are we about to get a nice rebound? It all depends on the data dropping tomorrow. Hopefully, the unemployment numbers are what the market wants for many people out there. The SQQQ was up a bit. The dollar index is just still very flat. It's almost like it's broken in a way. It's just very manipulated, not really doing much. The market ended up closing, kind of red, but the dollar is still kind of red with it. So it's not really correlating with the market as well as it used to. So I'm not going to focus as much on it. For Coinbase, this thing ended up selling off just a little bit. It's looking a little bit more bearish. It's on a slight downtrend. We could see it continue to downtrend a little bit more, but just to be safe, we'll have to see what happens with this data dropping. So if it somehow manages to reverse because of the data, the major resistance is now going to be at $80. There's a good chance it's going to make its way up to 80. If the opposite happens, you're going to be watching 77.55. If that fails, it's going to come all the way down to the support at 76. If that fails, let's watch 74.5, then 73.36, and then 72.5. Has lots of support to the downside. It looks more bullish right now from a technical standpoint, but the data is going to trump that, in my opinion, and we'll see what happens with that. Now, I've been asked about Google. What is going on with Google? My honest answer is Google is very sideways right now. It's not really doing a whole lot. The company is improving fundamentally, but the biggest thing that's going to be telling for investors to help this thing either pump or dump is going to be earnings over the next couple of weeks. Earnings is going to determine if Google starts pumping more or if Google ends up slowing down. However, from a technical standpoint, you could argue that there's this accumulation that is going on right here. So there's a good chance that it may start to pump up higher from a technical standpoint, but not a guarantee until we get to the fundamentals. So if you're an investor in Google for like the longer term, if you're so interested in Google for like the next few years or whatever, The answer is going to be based off earnings. That's going to be much more important to you. And these small fluctuations may not matter as much. But if you want to look for better prices to buy in at, dollar cost averaging is a very interesting tactic because it gives you lots of opportunity to just buy those dips when they come. And if it drops more, you could continue to lower your average. That's a very simple method. But like I said before, when it comes to the overall fluctuations, it's very, very sideways, stuck in a range for the time being. It's basically stuck between like 117 to 124, going back and forth and back and forth. In my opinion, I think that for tomorrow specifically, if it wants to be bullish, it needs to try to hold above this 121 resistance. If it manages to do so, you're going to be watching 122, then this gap fill all the way up to about 123.37, then 125. I think it's a little bit more likely it's going to make an attempt to try to get above 121 and eventually try to push to this like gap to fill it. It seems a little bit more likely it's going to do that. But looking at it, if the data does not allow that to happen tomorrow, we might see Google get a rug pull, come all the way back down to 119 and potentially 117. It's in the middle right now. It was very flat for the last couple of hours. So just be patient. Let's see what happens tomorrow with all the drops that are coming. With Amazon, this thing is looking kind of flat. I mean, if you just look at the chart, look at this thing from the last like few weeks. It's basically just going back and forth in a range. It just hit its support right here. So there's a chance it may try to rebound, get to the higher end. But that's only like a $2 move to the upside. So it's very, very sideways. If this thing turns bullish, it could make its way all the way back up to like 130. If it gets above that, we could see 131.8 around that area again. If it fails to do so, a break below this range would be a very bearish signal. Excuse me. So if it breaks below our support at 127, that's the major support to watch for, then we could see it come down to this imbalance down here around this 125 area to 124. So that's another like very important chop zone. You can see it was chopping here quite a bit and trading sideways here for quite a while with a slight downtrend to it. So basically, do we come all the way down to this next, lower zone? Confirmation would be a break below 127. If that happens, Amazon is going to start tanking more. If Amazon manages to hold it, then it's just stuck in a range. If it holds above 127, it's just going to go back and forth and back and forth. And if it starts pumping because of the data, at least to some degree, watch a break above 129. It's going to help it pump to about 130 to 131.85 as the next level. A break above 132 is going to help this thing pump more, but so far it's just stuck. So just be very patient. I think there's a good chance it's going to try to rebound and make its way back up to 130. But just to be safe, we have to be patient. Now, for Meta, it's looking weaker all of a sudden because we had new news that came out and also more slowdowns because of the data. Looking at it, it formed a bearish divergence after hitting $300 and started to cool off a bit. It was trying to hold above the 50, but now it's trying to cool off even more. Now we have this imbalance down here around this 187 area. I think it's around 180. What is this? 187. We have this imbalance, and we also have this zone at like 184. If it breaks below 290, did I say one, guys? I'm so sorry. 287. I'm so sorry about that, guys. If it breaks below 290, right? If it breaks that, you're going to be watching 287 very carefully on Meta. That's going to be the next important zone, 287 to 288. There's some support at 288, but also 287. And then if that fails, let's watch 284.5. It looks more bearish right now, so be very careful with it. But we're going to see what happens with the data dropping. If it somehow bounces off the news or the data like helps the whole market rebound like crazy, your confirmation of the bullish move is going to be a break and hold above 293. If that's what happens, if it breaks 293 and holds it, we're going to see this thing pump all the way up to about 295. Then the next important level is going to be close to right here, this high right here at about 298, then 300 after that. What do I think is going to happen? Well, I'm not 100% sure. It does look more bearish from a technical standpoint. There's no confirmation of it bouncing. So you should never assume a stock is going to bounce unless you get confirmation. So we don't really have that yet, so I can't really call it bounce. But it is a possibility, but it's going to depend so much on what happens with the numbers for tomorrow. All right, so we're just going to watch these levels very carefully on Meta. That's really all I could say about it. I know this video is like more vague than usual. I'm well aware of that. I do apologize too because I just don't know what's going to happen. I just don't know what the data will tell us. And once the data comes out, it's going to be much easier to read the markets, at least intraday, and we will see how the market moves. But until then, make sure that you are well aware of what's coming. Remain calm, cool, and collected at all times when trading. I will most definitely see you guys in the next one. The market to the moon is the long term is still incredibly bright, and peace